Welcome to the free world. Now, I've been hearing a lot lately, people comparing Bitcoin to gold. Now, this is like comparing apples to tacos. They're two completely, fundamentally, entirely different things. Now, gold used to be used as currency, and besides just being used as the backing for the Federal Reserve back in the day, it also used to be used as coins. But the huge difference is that gold is a commodity as well. Not only was it used for a financial instrument, but its basis of being backed was also based on the fact that gold had many uses. Gold was used in medicine, gold was used in architecture, gold was used in technology. Nowadays we have it in computer parts all around the world. We have it. The NASA uses it for their for sending rockets. It's got so many different uses. Now, Bitcoin, on the other hand, its main use is to be a payment network and a pseudo money. It's supposed to be, how they call it, the cryptocurrency. It is supposed to be a way to take money out of the hands of the banks. And it is a brilliant idea. Blockchain was a brilliant idea. I mean, blockchain's been around. Timestamps have been around for a while, but Bitcoin really revolutionized that technology. And in that way, it is revolutionary, but it's not the same as comparing it to an actual commodity, because Bitcoin's intrinsic value only comes from speculation. The value of a Bitcoin will always only be the value of which we give it. Now, there is one way that Bitcoin and gold are similar, and that is the fact that there is a limited supply. And that's one of the big things, is because there's a limited supply of gold in the world, and that's what drives up supply and demand. And then there's only a limited supply of Bitcoin. With Bitcoin only having 21 million coins, it makes it so if it actually becomes a successful payment network where a whole bunch of people are using it all the time, that its value will become more. Right now, there's currently only about 5 million people that have a stake in Bitcoin. Now, while it was originally made to put money into the hands of everybody to decentralize money, and it still might have that effect over time, only 7% of the people on the Bitcoin network own all the $21 million worth of, well, not $20 million worth of Bitcoins, but 21 million Bitcoins. Now, technically less than that, because not all the Bitcoins have been mined yet, but all Bitcoins are owned by pretty much 7% of the Bitcoin wallet. So it's still a huge amount of money in the hands of one group. But besides that point, actually, now I'm going to jump back to that really quick. The reason that is because when Bitcoin was first made, and even now, while it's an immutable ledger, it's still completely vulnerable to corruption by the use of gouging prices, changing the supply and demand, and making it look like it's going up or going down, and making the market move in a certain way. They had a huge problem with that, with two trading robots that they use to trade against each other to inflate the price over $1,000. And once that started happening, everyone started taking notice in Bitcoin, because they saw it escalate so fast and they saw it move so fast that they thought it was a larger investment. And that's one of the things that, boom, everyone wanted to jump on the bandwagon. Everyone had the fear of missing out. And then once everyone started jumping on the bandwagon, everyone started to get interested in blockchain technology. Everyone started to get interested in Bitcoin. They started to see the usages of it, and it exploded. Now, that's one of the big things that happened after that, was that once it exploded and all the volume took hold, the scalability problems of Bitcoin became noticeable. The transaction costs became way more expensive because of the effect on the network of so many people trading. And that's one of the reasons Bitcoin hasn't completely taken over, because they don't trade as fast once it's scaled up, and that's one of the huge issues that Bitcoin is having right now. And besides that, while you could trade Bitcoin faster than sending wires to some areas, and it costs less at this point because there's less volume, there's no simple way to turn it back into fiat currency at this current moment. And that's one of the big problems that Bitcoin's having. Now, gold, you could take gold and you could take it to several places just around you if you're in a city and be like, I need money for this gold. I need the money for this. And someone's going to be like, okay, here's cash right now. Boom. Bitcoin takes a little bit more time depending on where you are. Maybe if you're in a big city, it's a little bit easier. But if you're not, then it's definitely hard to find someone locally to be like, okay, I'm going to give you a Bitcoin and you're going to give me money and we're going to go on our way. Now, eventually they're going to have different lines of credit for cryptocurrencies, and that's going to be the real testing factor to see which of these altcoins and which of the major cryptos advance on to the next stage of the rollout. I think Bitcoin is going to be there in the next stage. Now, I don't know if there's ever going to be a centralized, well, not centralized, well, I guess technically it's a centralized, like one central coin that's going to take over, but instead just have a vast amount of coins, different types of coins, where the volume doesn't surpass the certain blockchain and is able to move smoothly. And I think that's what we're moving towards right now, and that eventually it's going to change slowly over time and become more usable, more user friendly, and people aren't even really going to think about it as much as more. It's just going to be almost just representative of fiat originally. That goes on with my speech for today about Bitcoin and gold. I hope you enjoyed the video and enjoyed my talk. If you did, give this a like and a subscribe and check out my other videos.